Good evening, good morning, or good afternoon, whenever it is that you're tuning in. I'm Jonathan Bengal here, host of Naked Text Talk Babies, where we bear down to the naked truth about our personal lives, our business lives, and of course, our monetary lives. Because what I know to be true is that when we address our personal self, when we approve the personal self, the business, which is a reflection of who you are, also improves. And naturally, honey bunnies, the money, which is also a reflection of your business and of yourself, also improves. And when you work with someone like myself, an IRS enrolled agent, certified tax coach, certified tax planner, the taxes go down. I often get asked, Jonathan, why do you have to always show up naked on your show? Well, babies, being naked is our ability to be vulnerable, to be willing to be open, and to cultivate courage. It's like RuPaul says, everyone's born naked. The rest is just drag. Today, I'm joined with Javier and Diane of Bravo Insurance Company. We're going to talk with you guys today about ways in which we can get some tax-free income. I'm going to ask him and probe him. How is that possible? Even though I'm a tax expert, I want to know how he also helps his clients to utilize this very fascinating part of the law. And yes, I have a feeling it has to do about tomorrow and not today. We're also going to answer two important tax questions that they have, but you, my friends, are going to have to watch at least into the 20 to 25-minute mark if you're watching this on a recording and you want to just get to the answer. Well, I just gave you the potential timestamp. So, without much further ado, I want to invite Javier and Diane to Naked Tax Talk. And by the way, this is an interactive show right now, live. If you've got your questions, make sure to introduce yourself so that we can see your questions as they're coming through. Diane and Javier, welcome to Naked Tax Talk.
Hello, hello,
So,
everybody.
hello. So, why don't you guys take a little bit of time and introduce yourselves? Who are you and what you guys are all about?
Well, I'm Diane Poythress, and I'm with Build More Health Insurance Solutions, as well as I work with Javier with Bravo Insurance Agency over here in Mesa, Arizona.
I love it. Javier?
I'm the founder of Bravo Insurance Agency for 36 years now. I'm a certified taxpayer and a certified filer. Okay, but I do it smart. I use an EA like yourself to help me navigate through that tax maze that there is, the tax code, which is very big. And
Yeah.
by making the right decisions up front of how to file your taxes and what products to buy from my side of the fence, it helps me save money and also save for retirement years. Like using a Roth plan, for example, Roth IRA. I maximize that every year. Hold, you got to hold it for 5 years. Then it qualifies to have all your withdrawals later on tax free. That's a nice way of increasing your income and having no taxes later on.
Yes, baby. Let me ask you, Javier. So we're going to come back to this, by the way, because I do want to talk about Ross. He sounds kind of cute to me, but I'm just saying. So, Javier, what got
I
you
am too.
started? What got you started in the insurance world? Was that always your story, what made you become the insurance agent that you are today?
Wow. A lot of good mentoring in the beginning. I started in the business because I was interested in buying more coverage when I got married. And I met
Mm,
with my insurance agent. I was impressed by what he did. And 2 months later, I got into it.
that's awesome. What about you, Diane?
Well, I originally got into health insurance to help my mother who was aging into Medicare, and she didn't have anybody to help her. So she called and asked if I could help her find a good plan for her. So that was the beginning of my insurance, and then it just expanded upon that.
It's almost like your curiosity kind of gets you, right? Because that's why I became a tax guy back now 18, 16 years ago, um, is because of my own situation of like, I don't want to pay someone to do my own taxes. And that's what got me started. So tell me, I'm hearing some feedback on the microphone. I don't know. There's some sound coming. Just don't know. Mic check.
Was that better?
Yeah. Oh, yeah. It's very loud, but that's fine by me. Okay. So now, all right. So your insurance. What were you doing before insurance, though? That's what I want to know.
Myself, I was in college at Indiana University, and then I went to insurance.
Oh, just straight like that. All right. Diane, what about you?
Oh, okay. Well, I have a longer story.
Okay.
I was at the dental lab in Castro Valley. I used to was a lab tech, dental lab tech. So I used to make porcelain and gold teeth. Then
Oh
I
my God.
my babies, and after that, I moved here to Arizona, and I wasn't working at the time, so I was a stay-home mom for about 10 years. And then it was time for me to get back into the world. So mortgages, I started off in mortgages. Then there was a crash in the market, so I went into hotel management and did that for a couple years. And then I went into property management, did that for a couple years, and that just everybody said, Diane, you talk too much to seniors. People love to come and ask you questions, and you talk too much. So that's how I got into I went and got a CNA, so I became a certified nursing assistant. So
Oh,
I started working with seniors, and I was doing that in about 2011. And then my mom was getting ready to retire, so she needed Medicare insurance, and I didn't know anything about it. And it took me a couple months to find the answers to the questions that she had. And I realized at that time there wasn't anybody out there for me to ask. I had to go to each company because everybody was a captive agent. Nobody was a broker. So that's how I got into insurance. And then I'm sitting across the table from a gentleman who's 72 years old and wants to retire, but he can't because he adopted his three grandkids. And for him to retire, his wife would have to go out and get a job to pay the $2,500 monthly premium for health insurance. And that's
wow,
when I decided we needed to find a health insurance that was affordable for people. And then
wow.
it just evolved. And then there's companies, small groups that we can help that have employer coverage that is affordable. So, employers can offer employer coverage to their employees because that's really, as everybody's known in the last year with COVID, having health insurance and benefits, is important because things happen. And then that's how I met Javier. And, he's just a whole nother level to benefits and taking care of people. And
It's so
that's,
true.
Well, Jonathan, I'm an independent consultant for 73 carriers. So
Wow.
that's quite a few carriers, right? And
Yes.
Diane had mentioned being a captive agent versus a broker. A captive
Mm-hmm.
agent, like your State Farms, your Liberty Mutuals, your Progressives, they can only sell their products. Okay, Allstate, for example. We're independent, where we can find the best solution for your needs based on what you tell us you need. We do a basic examination, like a needs analysis, like you did for
Mm-hmm.
captive, right? Very
Yes.
similar situation, or a doctor. Okay,
Yep.
you just go in there and I have this. Well, I googled it.
Yes.
That's not
Yes.
going to work.
Yes.
In fact, doctors don't like that.
Yes.
We do an examination of what your situation is, and then we find 5 or 6 or 7 things that you want to take care of. We need to find out which one's a priority because you can't do them all at one time. Like in eating an apple, I use it as an analogy. You don't bite once; you bite several times to eat that apple. Okay, so having Diane on board as a partner, a business partner, helps us serve the seniors, especially. Uh, we have a gentleman now. He's going to fade out pretty soon because he's 78 years old. But Diane's younger than that, so she'll fit in. She'll fit in that group very well.
That's pretty cool.
It is.
Okay, so I like that too, right? The independence to be able to make your own choice and not be beholden to a particular company, and I like that because you're absolutely right. It's about freedom of choice and deciding which we're going to go from. I'm going to throw this in real fast, and that is that you're an entrepreneur out there watching, and oftentimes we think that we have to pay a premium dollar to hire somebody to work with us. But it turns out that we can compensate our employees differently. For example, offering group health insurance that Diane mentioned a minute ago, group insurance. Also, life insurance as well, where the company is basically covering the employee. Key man insurance. There's all these different ways in which we can provide additional value to the people we hire and still mitigate the tax premium for hiring somebody. So,
Well,
Javier, or go
you're,
ahead.
you're absolutely right because if we offer group benefits to the worksite people, the employees, we can do Section 125 pre-tax, which not only gives the employee more take-home pay at the end of the day and the benefits of having insurance, but the employer doesn't have to match as much FICA tax, which so it's a win-win for everybody.
Absolutely. And also with Section 105 now, right, with the ability to reimburse our medical costs for both ourselves and well, ourselves, quote unquote, entity choices do depend, but I digress. And of course, the employee as well. So you're right, right? And let's think about this, because my argument in my book that I wrote, The ABCs of Deductions, I make the argument that Uncle Sam is our friend as long as we play inside the realms of what we're doing, right? And in this particular case, we're saying, listen, he wants us to succeed. He wants us to make money, right, Javier? Right, Diane? That's why we became entrepreneurs. And he's like, let's help the people that work with us and let's give them something bonus. And I'm not going to quote unquote penalize you by assessing FICA tax on you and that amount. So that's pretty cool. Javier, you kind of touched on something called a Roth. Now, I know a thing or two about Roths, but I always forget, what is the annual limitation for 2021? I get to ask this question a lot. If I want to contribute to a Roth, how much can I contribute to? I thought it was like 6,000, something like that.
$6,000 if you're under age 50, $7,000 over age 50, up to age. Well, there's no limit on Roths for age. That is traditional IRAs. There is a limit of 70 and a half.
Yes, yes, and that's what's creating.
Go ahead.
And how's the Roth creating tax-free income for the person who's contributing?
Well, first of all, the money's going into after-tax dollars, but being it's a Roth chassis, as long as you hold it for 5 years or longer, anything you take out of there is tax-free. That's by the rule of the law. What's nice about our product, and I'm going to share that with you, Jonathan, is we have a product that guarantees a 5% growth on every deposit for 8 years, plus what the market does, guarantee no losses. That's a really nice way to jumpstart your savings for retirement. I think we should send you a booklet on that, Jonathan.
I think we should. And you know what? It kind of feel like I feel like I better call bravo.com. That's what I feel like I got to do. Yeah. By the way, we have to talk about this because behind the scenes we were talking about this. Okay, so first of all, real fast, Roth, $6,000 if you're under 50. Otherwise, you can catch up and contribute 7,000. No age limit like a traditional, which is going to cap you at 70. And then you have something called required minimum distributions. But we digress, right? And so all of the earnings that are being made inside of that Roth are completely tax-free. And then you're saying, to sweeten the deal, that you will essentially ensure, so to speak, that the Roth grows by 5%. Now, let's think about this in money terms, right? Let's look at somebody who owns a home and they're asking themselves, do I pay off my house or do I contribute to retirement? Well, I know I'm going to ask a question. What question would you ask them in that scenario?
Well, how long do you want to live in that house, first of all? And is the house going to be transferred to your children or not? Because your kids might not want that. They might be out of state. All of a sudden, they're tossed into a situation of having to sell the house or manage a rental property. If you're not nearby the rental property, it's going to cost you money. But let's go back to that Roth with the 5% for 8-year bonus. Jonathan, if you have an employer who has 401ks, he has to contribute to all the employees. Yes. If you set it up as a SEP, simplified self-employed pension plan, you could be choosing 2 out of 5 or 3 out of 5 last years that you could choose who goes on that plan or just yourself. You're basically matching the money by the insurance companies, which is funding this, not yourself. So it's not even coming out of your own pocket to match. It's like creating your own 401k, but it's not a 401k, but it looks like it.
I like that.
Like it works like it.
I like it because, SEPs are really fascinating because SEPs are one of those things where we do have some limiters, right? So, for example, the maximum contribution, I believe, is $56,500.
25% or $57,000 maximum.
Oh, now that's it. So 57,000. See, I told you I'm not like the expert in this particular field, but I was close. Hey, not too bad. So 57,000 is the max contribution, or of course, if I go with, or 25% of the wage, the gross wage. I believe if I'm contributing to a SEP at max capacity at 57,000, the salary is going to be over 200,000. I believe. I think that's what the math comes out to be, right? And that makes sense. If I'm a doctor, a lawyer, or an architecture and I have a huge salary and I don't necessarily need all that money, so I'm going to move it into a SEP. In fact, I do this a lot for our clients. I refer that out. So now I know who to call. Better call Bravo.com. That is so cool. So when you're thinking, if you're when you're talking to somebody and they're saying, I always called you Saul, like Better Call Saul. So when they say Javier, so like I'm an employer and like which is my best choice, my SEP or my Roth or a traditional? Like, are we stuck with picking something, or can we kind of do a mix and match?
You can do a mix and match, as long as you don't go beyond the contributions, and that's where you need to talk to your tax advisor.
That's me, right? Because we're figuring that part out for you. And Javier, what I love about working with financial guys like yourself is that we become a team. Am I right?
That's right.
Because it's both of us now having this conversation for the benefit of the client.
Right. But you know what team is, right? An acronym for
Yeah.
together, everybody achieves more, right?
Oh, I never heard that way before. So I like that. Together, everyone achieves more.
That's
I
team.
like that. That is true. Yes. You know, it's interesting because in business, some of us can get into the mindset of not enoughness, right? Like, oh, I'm going to try to do it myself. Oh, I'm going to try to keep it and do it myself. But if we realize that the team together, everyone achieves more, that might help us to shift the mindset from not enoughness to abundance, which is another word for profit. And
Profit.
that's what we're all trying to accomplish.
If you use a team concept, we have, for example, your brain, my brain, and Diane's brain working on one problem, we'll probably find a better solution than just one brain working on it, right?
That is so
And
true.
that's a key thing for us helping people out there in the general public, right? Because the whole idea is we're there to help them now, but also down the road when something happens, the taxes at the state situations or whatever capital gain situation, we prepare properly up front, is better off later on.
I like that. And Diane, when it comes to health insurance, how do you help your employers to find like that right balance when it comes to medical insurance?
Well, that's when we ask a lot of questions. So basically, a lot of them come to us that they've already been quoted on the plan that they've been using through their payroll company, whatever. So we just basically ask them for what they have now. And I know the companies that we have, we can save them 20 to 30% right off the bat. So it just we look at what they have, and then we give them their options, and then we make choices. I mean, there's some things they choose different networks or PPO or an HMO. Our plans have options.
I like
Yeah,
that.
we could design it to fit your needs. For example, Jonathan, if you had 20 employees, at 20 you can have Cobra or decide not to have Cobra administration after you grow or so. We do that for you. Okay. We also have a product that's a group plan. You can pick different networks, like Diane said, Cigna, Aetna, PHCS, or United Healthcare. Your choice. That way, you get the right doctors in the right locations for you. Okay. But more importantly, if you have a good loss ratio over 18 months, they refund up to 40% of your premiums back to the employer.
Oh wow.
So you have a young group of employees, you're probably going to have a good loss ratio, right? So might
That
as well
makes
put
sense.
in that kind of plan, it reaps rewards later on for the employer, which can pass along to lower rates for the employees or to put it back in his own pocket.
Absolutely. And let me ask you, so can you help us? Because I mean, I just was buying insurance group policy and I was like, what the hell does all this shit mean? So,
Hey,
what?
Mexico.
So, when you say loss, how is that defined in this world of insurance?
Okay, with the Affordable Care Act, every insurance company has to pay out at least 68% of their claims. Okay, of the premiums out in claims. So if you have better than that loss ratio, this company has to refund the money back to you, which is really nice.
Ah, that
Well,
explains why last year I was on United, and last year I got a check in the mail for like $18 and something changed, and they said we're refunding this premium because we didn't use it for medical or whatever. That's what you're talking about.
right. So I got a check like that 2 years ago for $1,680. Okay, but then
Oh, shoot.
yeah, no, seriously. And then later on, the next following year, I spent $150,000 in the hospital, so I didn't get a refund for that year. But
Ouch.
I'm still okay though. I'm way ahead.
You're way ahead. That's awesome. Now you guys are based in Arizona, right? But what city are we in?
We're in Mesa, downtown Mesa, and she also has an office in the Biltmore area. But I've got agents in 38 states, and so does
Ooh,
she. And I service clients worldwide. I have people in South America, Eastern Asia. I've got Canadians in France and all that. So I'm pretty much global.
that sounds like me. I got clients all over the world as well. So it's kind of interesting, isn't it? Because we're no longer like talk about a global economy. We can all come to one space now and really help out. So how in the world do we cover ourselves if we're traveling international? Do you guys do insurance like that?
I do, and I have for people, foreign nationals coming here, and for us going out there, that covers you worldwide, and it's based on the day you leave and the day you return, and it
Oh,
covers for everything, including
like
COVID.
medical, health, all that stuff.
If you die, they'll actually bring the body back to wherever you want.
Okay, well, you just touched a nerve because my really good friend, his husband passed away a month ago.
Mm.
And it was a wake up call for me. So I was like, holy moly macaronis, like talk about preciousness of human life. And what was interesting is I in the process of all this, I'm with him while he's doing the like basically making the arrangements for the crematorium and the funeral home and all that stuff. And I
Uh,
looked at the invoice and I was shocked. It was $1,900 to carry the body right from the hospital to the funeral home.
yeah.
And because of my background and my cheap ass that I came from, I said, well, can I just put the body in the truck and then drive the body there? Like, I mean, do I have to pay $1,900? Can I save it? So you're basically saying that your insurance policies could cover all that, and then we don't have to worry about
That's
Right.
right.
So we should have another podcast later on again because I have something called living benefits. What I like to say on our radio show and to our customers is when something bad happens, you want to call us, right? Because you know
that.
what?
Better call Bravo.com.
That's right. And if you're calling us, that means we're going to bring you a check. Okay. Not a cash.
Nice.
Okay. We're going to bring you a check. So when something bad happens, do you want a casserole or do you want a check? You want a check. Okay. We're
Yeah.
there to help you when things go bad.
Yeah, you know what? I get this feeling from you, Mister Javier. I get this sense that like we have to do a little bit of on-air foreplay with you a little bit before we start like talking more. Because I saw what you just did. You whipped out your check thing. That was pretty damn cool. I have to admit. No, listen, I've been doing this for 2.5 years now. My show's been on air, and it's always like that first 20 minutes is the foreplay on air, and then we get down to the nitty gritty. So I have to ask you, as I asked you back behind the air, where in the hell does bettercallbravo.com come from? Like, where did you pick that up from?
Watching Breaking Bad.
Is
And
that one of your favorite shows?
well, it's one of my favorite series, yeah. And I love Saul. I love what he did because I'm like that. I think out of the box. I find a solution, no matter what the obstacle is, to do the right thing.
Hmm.
And I'm not a criminal like he's a criminal attorney. Remember what I say, okay? But okay, there's rules to follow, like it with the IRS, right? But if you
Yep,
know the rules will help you. Okay, if you don't know the rules, they will hurt you. Because I
that's right.
coach basketball as well. Okay, if you don't know the rules, they're going to hurt you because there's
Hmm.
an opportunity there within the rules to do right and to be right.
Yes, yes, and yes. So I started watching Better Call Saul, by the way, without realizing the connection to Breaking Bad, because I had to stop watching Breaking Bad because I was like, this looks too much fun. Like this was scary for me, so I stopped watching it, and because it was too the show was addicting. Like I was like binge watching like crazy, and it scared me to death. So I was like, nah, you stay over there. So I started watching Better Call Saul. And I'm inspired, exactly what you said. I was inspired by this guy's constant hustling, like way to
Yeah,
survive. But I love how you came up with it. BetterCallBravo.com. Like that is genius. You know what we call that? We call that stickiness in marketing, right? Like we call it stickiness. Just like
mhm.
Naked Tax Talk was created at a tax conference by me wearing a bathrobe because I was so damn cold. And I was tired of being asked why I'm wearing a bathrobe. And I just said, oh, I'm a host of a show called Naked Tax Talk. Bear down to the naked truth. So yeah, it's pretty cool. All right. So before we jump on to tax questions, because I know I do believe you got two of them. Um, so when I'm thinking about now, am I limited to health insurance, or can we offer do you have other insurances that you guys have?
What?
Oh, go ahead,
Okay, I
Javier.
have a whole menu of products and all that.
You're
Life,
asking
life
a
insurance,
loaded question.
life insurance, living benefits where you don't have to die to collect. If you have a heart attack, cancer, you get the money while you're alive, which is very nice to
Okay.
pay off the mortgage or to replace. I don't know if you have disability insurance or not, but if you don't have it, at least have the life insurance with living benefits, so that if you lose 2 out of 6 ADLs, activities of daily living, you get money while you're alive to care for you, pay your bills, put food on the table, so that way you can survive financially. Because
Mm-hmm.
are mostly for medical bills. Okay,
Mm-hmm.
disability insurance. The only tax deductible disability plan out there is called business owner's expense. Okay, that policy is tax deductible, but what that does is pays for the business to continue on for up to 24 months to pay
Oh
the
wow.
electric, the rent, a replacement of you, so that way you can recover and your business stays viable. So in case you can't come back, you can sell it and the value of the business is still there. That's very important for self-employed people, especially.
Ooh,
Okay.
you know what? I got again chills because like I'm thinking like you actually pretty
Hold
much
on.
like you're not you're nailed it. Like you completely nailed it. It's absolutely right. Because you see, I think what we as small, especially when you're a small business owner, like you feel like, oh, nothing's gonna happen to me. I'm young, I got my health, blah 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 blah. But what we don't realize is that all it takes is one thing to take us out, set us back, and then how to it's so hard to build a company. I mean, would you agree? Like it takes a lot of effort and energy, and we're really saying, look, we're going to look at the insurance as a way to protect you so that you can continue on with what you spent your whole life building.
Does the employer pay for
Right.
it?
Right.
Company pay for it?
Yeah, it's sexism. But you're right. When you're an entrepreneur, you start with this idea. Okay, you live and breathe and bleed your business. Okay, and you're going to work 24/7. I work half days, 12 hours, 14 hours. Okay, I still work them, but because this is your baby, right? You want to see this thing grow, right,
Hmm.
and mature, and then maybe
Hmm.
sell it or whatever, give it to somebody to run it for it, so your name carries on, right?
Hmm.
Yeah, being self-employed, not having to have a boss to tell you when to come in, when not to come in, things like that, when to take off. Okay, I like taking time off when I want to, when I can.
Oh
Okay,
man. Oh
right.
man. Woo woo.
Okay, so
Yeah.
I had 3 kids. I was able to coach baseball, basketball, and go to the swim and go to every school event because I was self-employed. That's a valuable thing I wanted, and I got it. But you have to work hard
Hmm.
for it. You have to be dedicated. You have to be smart about it. And being smart about it is having an EA, enrolled agent, to help you with the taxes. They need professionals like yourself to keep them out of trouble, right? Because you don't
Hmm.
want the IRS behind you, right? You don't want that.
No.
Uncle
No.
Sam's not nice. He's
No,
not.
he's not. Once you piss him off, it's hard to get him off your
Well,
back.
I run across clients all the time that they got letters stacked on their desk from the IRS, not even opened. Okay,
Yep.
what's the worst thing
Yep.
to do? Ignore them, right? The second worst,
Yes.
the second worst thing is to evade taxes. That's the second worst thing
Yes.
because that's a criminal
Yes.
offense, right?
Yes, exactly. And that's a fine line, right? Because it's like some people like go, how can you get all this money for your clients? Like how is that possible? And all we're doing is simply tapping into the tax law as it's written. We're looking at tax courts the way that they assessed and set precedents, and we're using that to formulate the legality behind what we're trying to accomplish inside of our own tax planning for our clients. And that also involves saying to a client, you need to protect your assets. You need to get insurances of some kind, whether it's added employee value to your employees, or it's to protect yourself, like you said, with disability insurance, or if it's for long-term longevity, right? Like there's all these things we have to do, and often as entrepreneurs we forget that Uncle Sam wants us to bettercallbravo.com so that we can in fact tune in, check in, and basically level up what we're doing as business owners.
That's correct. So you got to protect your assets and cover your ass. Is the bottom line, right?
All of that, all of the chingadas, all of it.
Oh, that's
I was
He's from New Mexico. He calls shit differently. How do you say
shit,
shit in Mexico?
shit.
Shit.
You know what?
Yeah.
They say New Mexicans sing their words.
Do you sing your word?
Sometimes it depends.
Sometimes?
Yeah, I've been in Arizona though since '05, so it's been a long time. I've lost my accent a little.
If you get a group of New Mexicans together, it's kind of like, oh my God, they went over there. They went
Yes, yes. Oh, I'm doing it right now.
You can't get two New Mexicans on anything together because it'll all come out, and then it's like not proper English anymore. It's like, oh my God, did you see how tall he was? All tall, huh? Like it's
Oh my, I know, huh? Shoot, that's right. It is true. It is absolutely true. By the way, there's someone over there. It's a ghost. It's a ghost we're talking to. She's off the screen apparently. But
Well, okay.
It's Stephanie.
This is Stephanie. She's from New Mexico.
hi, Stephanie. What part of New Mexico are you from?
I'm from central New Mexico, from a really small town called Onair.
Oh, Mountaineer. What? Where, is that? Is that by like? Give me one more reference. Give me the next biggest city.
So the next biggest city would be, to be honest, is Albuquerque. But do you know Moriarty or
Yes.
Edgewood? So
Yes.
it's south of Moriarty.
Got it. All right. Cool beans. All right. Yeah. So Fallon, New Mexican. There you go.
Where are you from?
That I was born in Albuquerque, New Mexico. Born and
Okay.
raised there. Yeah.
Yeah.
Wait a minute. So since we have this new person that just like popped up on my show, what's your name and who are you and what do you do?
Sorry. My name's Stephanie, and I was listening from the other room, but kind of the same thing with Diane. I was doing I was in banking for over 20 years. I was a bank manager, and I came across Javier, and took a leap of faith and believed in him and everything that he does for his clients, and I want to do it too. So I came
That's
over.
awesome. Javier, you know what? You're like a trailblazers. What's it called? What's it called?
Trailblazer.
Yeah.
Trailblazer. Thank you. See, told you. She just said it. See, we have improper English after we get together. See, so a trailblazer. Because you know what? You kind of inspired me a little bit because I have the same thing where I've got my employees or people work with me. It's about buy-in, isn't it? Like because we're passionate about what we do. Now it's pretty evident. Like you've got Diane working with you, Stephanie working with you. She said it, right? She believes in what you're accomplishing. And that's what we want too, right, as entrepreneurs, is if we stop thinking about our employees as a machine like a printer, and instead as somebody who has a valuable space in what we do, they contribute to all of us. And it turns out Uncle Sam has this thing called a profit sharing plan that we can tap into and split the profits amongst all of us, and we all benefit. We can also discriminate as well in tax as well, right? So we can.
Well,
So,
under
all
the
right,
whistle laws, yes, you can. Yes.
same thing, right? So it's kind of fascinating that a lot of times taxpayers like they don't understand that the law set up all like this. Now, the reason why we can discriminate, and you and I both know this, why we can discriminate is because unfortunately sometimes employees are flaky and they come in and they go out, right? And we know that it costs up to $40,000 to hire a new hire. And so Uncle Sam is like, I don't know if I want them to have a piece of that cake just yet. So you, the employer, can decide when they get to eat cake with you. So it's yeah, you're a trailblazer though, like just like me. That's what I do. I'm like, you believe in what I'm doing, let's do it. Let's make money. So, all right. So you technically have some tax questions for me. We're at the 33 mark, but that's okay though. What were your two questions you had for moi?
Well, I wanted you to define so I could take this podcast and give it to clients on an email to define why we need to use a Schedule C. Okay, because the Schedule C to me is the Bible of tax code. Okay,
You think so?
Well, it allows you to deduct so much benefits for employees, pensions for yourself and your employees, auto miles, travel miles, meals, all that kind of stuff. That's what's so nice about the schedule. And then second page is you do your depreciation models. Okay, it's all good stuff.
It is. So let's talk about that. So a Schedule C falls under the 1040, which is known as the individual tax return. And the Schedule C is basically the summary of your business tax life as what we call a sole proprietor. So I have this lovely I have actually an episode on my show here called Sex and Entities. And I like to explain it like this. So, a Schedule C that's a sole proprietor, it's like having unsafe sex. So, all it takes is one bad time and get one bad STD, and you could be ruined, right? This is the sole proprietorship filing on a Schedule C. Now, what happens is someone goes, well, I'll go form a limited liability company. That's what they do. But what they're really saying is that I'm going to go put on a dental dam so that I don't get direct transmission. But the truth is stuff can still come out from the side right here, right? So
Because
they
it's a
still file.
operation, right? Yeah.
Yeah, so it still has some leakage over here, right? And as a result, Uncle Sam is a prude. And in fact, I have a program called Rapid Tax Savings Form. It's a 5-week program that I put together that we talk about this in depth. And essentially, my students, they learn how much of a prude Uncle Sam really is. So Uncle Sam goes like this to you, Javier, and to Diane, and to Stephanie, who's listening, and to you out there, my viewers. He says to you, oh, bravo. You want to become an entrepreneur because the reason why is to make money. That is the real reason why we became an entrepreneur. That is the truth. And so he says, I want to keep making you money because I need money so I can pay for schools and roads and things of this nature, right? So, needless to say, he says, but I don't like that you're practicing unsafe sex. I don't approve of that. In fact, I bet you the ladies in the room right now could tell us how prudish the government is, right? They tell us how we can control our bodies. Am I right? And so he says the same thing about your tax practice, trying to have unprotected sex in your business. And he says, you know, you're going to pay a premium of tax as a result of trying to have unsafe sex or using a dental dam, a limited liability company. And so he says, but you know what, though? You can practice safe sex, also known as a corporation, also known as a condom. It's 99.99% effective, unless you pierce it, which can happen when you commingle your funds. So when we have a condom in place, right,
Right.
a corporation,
You're
Uncle
like,
Sam's like, you know, I'll tell you what, now, Javier, I'm glad that you're wrapping it up when you're practicing your business like this. So, as a result, I'm going to lower your tax rate downward to a 21% flat tax through 2025, right? Plus, I'm going to open up a whole bunch of additional benefits that you can tap into being an owner employee of your own business. A Schedule C, on the other hand, is limited to the amount of fringe benefits that we can deduct on the tax return versus at a corporate level. So there's a guy right now that used to be a president who likes to say a lot of lies about a lot of things. And this guy is probably going to go to prison, not for all the other crimes that he committed, but because he avoided taxation by writing off fringe benefits without having the right documents in place. And we call that D for documentation. And I'm not talking about the other one, I'm talking about documentation. And I go over this in my class, Rapid Tax Savings Formula, to really talk about those documents you need to protect yourself in the event of an audit. So, needless to say, the Schedule C is fantastic for somebody who's starting out in the beginning. But just like with everything else, our businesses are like our babies. Again, I talk about this analogy in my course. Because if we can see our businesses as our children, like my kitty cat, separate of who we are, separate of who we are, then we're capable of making the decisions that have to be made in our business to have a better outcome for ourselves, to generate the profit that we need in our lives. So, needless to say, the Schedule C is a great way to do it if you're self employed, but be ye cautious. Uncle Sam is a prude, and he's going to charge you a premium in tax, especially when you start to get very successful. So, what I do as a proactive tax planner is I sit with the client and I actually map out called a customized tax roadmap, where I actually say to them, when you hit this part, oh,
Yeah.
got my own star over here. When you hit a certain point, we have to shift you into a new entity choice to continue to maximize the tax deductions.
Well, that threshold is about $450,000, right? And you have to do
No,
1998, right?
Yeah, it's going to be for the 199A. So you're talking tax talk. So let's break this down. So what you're talking about is something called a qualified business deduction, right? Income deduction. And basically, what this was created by the Tax Cuts Jobs Creation Act that basically said that we can exclude up to 20% of your net revenue from taxation that flows through. Now, the corporations have the same type of deals. S corps operate in a similar way. You're absolutely correct. But what we have to be mindful of is the premium of tax that we're paying. You see, when we're a Schedule C filer, the moment we hit $400 in net income, we're going to be subjected to a mandatory tax of 15.3% tax. Mandatory. There's no way around it unless we utilize deductions to eat into that premium, right? When we add the self employment tax, to your ordinary income tax, which is based on a bracket as high as 37.5%, when you add them together, we get a combined tax of over 50%. And so this is why we look at other entity choices to mitigate that tax.
Mhm. Yeah, you're not even including the FICA 15.65 either. So
That is it right there. That's your FICA tax, the employer-employee portion. And you can't deduct that from your tax return as a business-related expense. You get a above the line deduction, which is a reduction of taxable income, but you don't get a straight write off of net income because again the threshold is $400 in net profit.
400,000. Yeah.
Forty
Okay.
$400. $400.
Dollars. Okay.
It's crazy, but listen. Oops, you're seeing
Oh.
my ceiling now. This is what I disappeared for a
Oh.
second. This is what I always say, right? Like the cheapest way to start a business in America is to be a sole proprietor, right? And then you can do the LLC down the road, a couple of minutes down the road at a very minimum, right? But at least this way we can start to tap into the business related deductions. So here's what's key, right? In a startup. When you're starting up, you can't just deduct your expenses right out of the bat. You can only start to deduct your expenses the moment that you open up your doors and take on your first client.
That's right.
That starts to unlock the tax code for business purposes. So, Schedule C is fun, it's appropriate in the beginning, and it makes sense to move away from it later in the journey of the person's business.
Very good information. Thanks for the advice.
Yes. Yes. And by the way, to help you out, Javier, we both know this. If I'm a Schedule C filer and I have net profit, I can in fact contribute to a SEP, thereby reducing my income downward.
Mhm. Very good.
Yeah.
Any more questions?
Oh,
Comments?
that sounds like. You want to say anything, Stephanie?
No.
Sarah?
No, I'm fine.
You're fine. Okay.
She's like, no, that's fine. Yeah. So that's what I would say about Schedule C. They're good for startups. They're good for again, you're just by yourself, right? And you're just doing your thing. But eventually we're gonna move into another entity.
Okay. Sounds like we have a lot of business to refer to each other.
I'm
So
down
we,
with that. I'm totally in doubt. This is probably one of the. So, just for you viewers out there, I want you to know that what Javier, Diane, and Stephanie, what we're kind of doing in this moment is having something called a one-to-one, right? In the networking world, if you're going to build your business, one key thing you want to do is determine your marketing technique. Networking is a form of marketing. And so right now, if you're noticing the synergy that's happening in the room between all of us, is that we're starting to build the likability, the trustability, the knowing ability. And eventually what's going to happen in the future, and Javier, we'll probably have to do another episode, but what's going to happen is that we're going to start to refer business to each other and start to become that team that we're supposed to be for those out there who are taxpayers who need our help.
which increases our profitability, right?
Ba-boom!
Okay.
All day long.
Before we head off into cyberspace here, I want to let you know that we have a mortgage consultant here, which is Stephanie. So if you have clients out there who need mortgages, she's a great asset to you. Okay.
That's
So,
absolutely correct.
okay.
That's
I'm sure
absolutely
you're
correct.
buying houses, refinancing, or doing a reverse mortgage, which is fantastic for your seniors out there. She's your gal.
No, let's back up because the episode's about tax-free income. So in a reversed mortgage,
That's right.
that's sort of like a tax-free income situation
That's
as
right.
well.
Today's high market values of homes There's a lot of equity out there to help a lot of people. You might even afford a shirt.
Javier, I'm gonna send you one of my shirts. I'm gonna send you one of my
Yeah.
shirts of my show. We have black shirts with the logo right here, Naked Tax Talk. By the
Oh,
way, when we gotta burn money in business, right?
yeah.
Buy advertising. Because as in my book, under letter A, Uncle Sam wants us to be heard and he wants us to be seen. It's a human principle. And he knows that if your business is not seen and heard, you're gonna dry up and die. And
Yes.
this is true of your business. So if you got extra cash laying around, again, I meet with my clients based on this and we go, let's go spend an extra 20, 30 grand on marketing materials. Why not?
Right.
So, he's got something.
Cash? What do you want? How much do you want?
Woo-hoo! Yeah, yes,
I
yes.
got
All right,
whatever you want.
I love it. Oh, Javier, see, I told you, I knew you'd be a good playmate on this show. All right, so Javier, before
Okay, you. Okay.
before we get moving forward, though, what would be some of your parting words of wisdom for the people out there who are looking for tax-free income?
Consult a professional. Don't do it yourself. Okay. Even with insurance, don't go on Google, don't go online and try to buy insurance because it's a complex situation. And you don't want to screw yourself because you know what? If you say something wrong or put something wrong on the online application, that Medical Information Bureau will have that document for the rest of your life and you'll never get that off. It's harder than fixing a credit report.
Oh,
And
and I fixed my credit report, so I know how hard that is.
okay. Are you up to 500 yet?
Oh, my credit score. I am proud to say, I am not ashamed to say. So, I actually filed for bankruptcy in 2014 because I
Okay.
was your classic 20-year-old who, again, you have to understand, right, Javier? My background is I grew up in extreme poverty. So when I went on to university and they said, "Here, take a credit card," I didn't have the concept that I had to pay it back. I mean, I sort of did, but it was like, I'll pay it back over time. That's what we all think. And at the time, before I got my degree, I didn't understand this concept of interest, right? The opportunity cost is really what that is. And so I was your classic American where I was racking up thousands and tens of thousands of dollars in debt, trying to live like the Jones instead of just being content with who I am and where I'm at.
Yeah, to
And
live it
so,
within your means, right? So part
yeah,
of our mission here is also to provide financial literacy to people, teach them
that's the
about
ultimate truth.
and insurance and mortgages, all that kind of stuff. It's all important factors that they don't teach in school.
And they
There's
don't. And
but they
so they don't. And so then you end up like me, where I'm like, well, okay, fuck it. I'm not going to pay them anymore. And the
don't.
reason is because I got my
Is there a
interest.
filter on
I got the statement in the bill in the mail, and the interest rate went from 5.6% to 24.99%. This is during the recession in '08. And I called them up and I said, hey, I pay the minimum payment. Sometimes I pay them full, but like, why did you guys change my interest? And you know what they told me?
what?
We're all experiencing hard times. So I thought I'd give them a hard time and not pay. So that's what I purposely did. I was like, fuck you, then I'm not going to pay the debt. Why? Because I knew that it was unsecured debt, right? The
Mhm.
only legal recourse they have is to garnish my wages. Good luck, I'm self-employed, but I digress. So in 2014, or sorry, 2009, no, 2014, I decided to break through the shame of bankruptcy. See, we're all ashamed to say it. We're all ashamed to admit it. And I decided that I was going to bite the bullet and I was going to do it and I was going to set myself free because I came to understand that the law of bankruptcy was written for people like ourselves so that we can finally move forward instead of beholden to the prisoner of this old debt because we don't know because they don't teach it in school. So,
Okay.
anywho's blues, I filed it. My credit score tanks. It shoots all the way down to the lowest point you could ever imagine.
Did you
I'm
do
proud
11,
to say,
13, or 7?
huh?
Did you do 11 or 13 or 7?
It's a 7. So complete wipe of
Wiped
all
it
debt.
all off. Wiped it all off.
The
Okay.
whole thing.
So you mentioned the previous president, right? About his
Yes.
tax. Right? So
Yes.
he uses bankruptcy as a tool, financial tool, because that's what it
That's
is.
that's what it
Right?
is.
That way yourself.
That's it.
So okay, it's a tool.
It's a
Nothing.
total tool. And I'm not opposed to that part about the old guy. But what I'm annoyed with
You're the
is
younger one.
of the young one. What I'm annoyed with is the fringe benefits, right? I'm not upset with him. What I'm saying is he's fucked up. because he did not properly document and pay the tax on the French benefit. That was his fuck up. So if you want to be like him, don't file for French benefits, don't report it, and you'll end up in the same business. You'll end up behind bars. But if you report it, you document it, and you pay your fair share of taxes on those French benefits, Uncle Sam's smiling all day long.
Sure, sure.
That's the moral of the story.
Okay.
And by the way, my credit score is 735. So,
I'm very good.
oh, boom.
You qualify for a loan. 2% down, 3% down. Just talk to Stephanie. She'll take care of you.
There you go. Yes, I'm fortunate in that I purchased my own home, and actually we just refinanced. So Stephanie should be on my show again, because here's the truth about mortgages, right? It's a catch-22, right? On one hand, when you're self-employed, the object of the game is to show very little income legally, right? So as to mitigate the tax. But from her point of view, she's like, fool, you have no money. I can't give you money, right? So, see, I know what I'm talking about. I've been doing this for a very long time, very long time. So I actually have worked with mortgage brokers who understand the self-employer's point of view, right? So we have to really mitigate and proactively plan in the current year so that she goes, this is what needs to happen. How do we legally get there? So that way we can qualify you for the loan so that you can fulfill the American dream and buy property.
That's right. That's right.
Yeah.
Well, the same thing happens with business owners who want to buy property, like large trucks, Section 179 at the end of the year. Okay, so you deduct 100% of it as long as it's the right weight. It's all about planning ahead. It's all about planning ahead. I learned early in life that in October I started doing my taxes already, so I know what I have to pay and what I can start sheltering.
That's right. That's absolutely right. It breaks my heart, Javier. You don't understand. Like, it breaks my heart. You know, I'm a people pleaser. That's what I was born to be. And it breaks my heart every time when tax season happens and people come in, they go, help me, Jonathan, help me. I don't want to pay taxes. Help me not pay taxes from last year. It's against the law to help you avoid taxes now that the year is over. I can't do that for you. That's breaking the law. But had you come into my office, like Javier just said, in October, and we proactively planned this shit out before the year was over.
Okay, but one thing you can do after December 31st of any year, you still contribute to an IRA or a SEP plan, because that goes to the day you file.
I left that for you, by the way, because yes, this is.
Oh yeah,
they have till the due date to fund their retirement plans, and that makes perfect sense, right? I mean, it makes perfect sense because you want to know what your numbers are, so that way you can calculate for the contributions. Right. It makes perfect sense to me. All right, so listen, I've been enjoying you guys. We're over my allotted time, just so you know, but I've been having a lot of fun with all three of you, the ghostly Stephanie on the side, and of course with Diane and Javier.
And Sarah's here too. So.
Yeah. Oh, and someone else named Sarah there.
We have a Cuban-born person here.
Nice. Órale.
Say hi.
You had a whole audience, Jonathan.
This is Sarah.
Awesome.
They love you.
I'm the Spanish speaker here.
Órale, pues, yeah, porque hay mucha gente que necesita our help.
I've gone 32 years.
Nice.
Yeah, I lived in Asia for 37 years.
Asia, you said?
Hong Kong and Taiwan.
Do you speak Mandarin?
Dian.
That's so cool.
When they start talking to me in Chinese, I talk to them in Spanish. They go crazy.
That's funny. So I am a polyglot as well. So I speak in order of fluency. English, then Française, so French.
Ah, français?
Je parle français.
Yeah, I speak French.
Je parle français. Yeah, c'est ma deuxième langue. C'est ma deuxième langue. Je parle ça avec tout le monde avec quelqu'un qui voudrait parler français avec moi, donc je parle français. Yo hablo español.
No, that's great.
Yep, and yo hablo español también, pero nomás con mi mamá y todo, nomás con la familia. That's right there. And я говорю по-русски много. And I speak just a little bit of Russian, just enough to be slapped probably. And funny story there real fast. And so I'm 23 years old. and I'm secretly studying Russian at the university because my best friends are all Russians. And I want to know what they're saying, and I'm enjoying eating their food and everything, right? So there's the one time and the one time only that I have an attraction to a woman, right? So for the record, I had an attraction to only one woman, right?
I love
So,
it.
so she was gorgeous in my opinion. And so we go to this discotheque, and I'm practicing the phrase, which is, Ты очень красивая, я хочу танцевать от тебя. Ты хочешь танцевать меня? Which is like, I think you're really beautiful. Would you like to dance with me? You know, like, come dance with me, basically. So she says to me, so first of all, she freaks out because I say this in Russian. And she goes, Niet, like, no. And she goes, first of all, I can't believe you speak a little Russian. And then she goes, I can't because my husband would disapprove. And here comes this big bear coming down the hallway, you know, like coming down the hallway. I was like, I got to dance. So I book it. Now, mind you, I thought she was my age. I thought she was like in her 20s. No, she was not. She was in her late 30s. So anywho's blues, it turns out that like I was attracted to a much older woman, and I tried to impress her with Russian, only to be told no. But I'll tell you what's
That's a good story for you.
But I'll tell you what I do is I write English but in Cyrillic. So sorry, I gotta get a cord. I write English words but in Cyrillic, and that's my own personal code. So if I don't want people to read my notes, I'll write with Cyrillic as it represents letters for me.
You should be a spy.
I could be right, totally. I mean, yeah, because even if Russians read it, they'd be like, this is not a Russian word. So yeah, it's pretty cool. Anywho's blues. So it's a pleasure to have met all of you. Javier, you are surrounded by amazing women. That is fantastic. And interestingly enough, it's women who I work with the most, women entrepreneurs. And the reason for it is because one day I was told, you know, Jonathan, you have a woman's heart. And I didn't know what that meant. Other than I bet you, like Diane and I, we just hit it off. Like we were just girlfriends at an e-women's conference, right? It's just the way it is. And I figured it out not too long ago because like my whole life, it's always been a woman at my side, whether it's my mother, whether it was my teachers, whether it was my mentors, it was always a woman who showed up for me. And I know this to be true. Women are treated like second-class citizens, so much so that they write laws to treat them like it. But there's one area in which we get to equalize it, and that's in tax law. And that's why I work with women entrepreneurs. So before I go, just remember, we want to better call bravo.com to get your insurance needs, especially if you're an employer. Let them allow them to work with you so that you can better put yourself into a better position to serve yourself, your employees, and your clients. And last but not least, let us not forget why we became entrepreneurs. Why? It was for all the mucho dinero. Until next time, I'm Jonathan Bengal, host of Naked Tax Talk, and who knows what the next episode is going to be about. But I hope that you've enjoyed today's episode. If you found it entertaining or you really liked it, please make sure to hit the subscribe button and the alert button so you know when I get my crazy ass on here and we talk about your personal life, your business life, and of course, your monetary life. Thank you so much to Javier. Thank you so much to you. Thank you to Diane. Thank you to Stephanie. And thank you to Sarah, I think was her name. Is that what you said?
Yes.
Yes. Órale. So I want
Órale.
to órale. So I want to say thank you to you all. And may you may you all be happy. May you all be free from suffering. And may you all never be separated from your happiness. Remember, it is with mucho dinero. Until then, toodles and noodles. Au revoir.